What's up, interwebs? It's your realtor, Jeremy. It's Tuesday. It's time for the Tuesday market update. And my lord, am I glad my hairstylist is back open on Saturday because Jeremy needs a haircut. I don't think it's been this long since like high school. It's really long. Anyway, let's get into numbers. We're going back into closer, a little bit more of a format from before the whole coronavirus thing started, just to give you guys an idea of kind of what we're looking at numbers wise. So let's get into it. First, we're looking at Chandler. We've got 6 graphs up there. First one shows the number of listings. As you can see, the active bumped up in April because the new and sold ones went down a bit. So increase of inventory. However, since the beginning of since the beginning of May, I've been watching the inventory levels start to decrease again, which means more buyers are out there. Market's getting a little more active, so that's pretty good. Listing prices, they did dip a bit, but we're still averaging about 2% above last year's April numbers. So absorption rate, as you can see, we're still at under a month and a half of inventory, so that's still very strong seller's market. It has to get to 3 months of inventory before we see prices start to settle, not decline. A lot of people, I'm going to do a question and answer kind of video here soon, but 3 months of inventory means prices stabilize. For prices to go back down, we actually need more than 3 months of inventory. So you can see we're quite a ways off from that. This next one, sell to list ratio. I've not shared it on this channel before, but basically what it's showing, so we got 2 lines there. The top one is sale to list price. The bottom one, the black one, is sale to original list price. So as you can see, in March and April, we were at just under 99% of original list price and a little bit over 99% of most recent list price, meaning people are not way overpaying for houses. I think it's also a balance between agents pricing houses appropriately and also value and stuff like that. So there's a couple of indicators in there, but that gives you an idea that somebody lists a house for $1 million, it's going to sell for $999,000, more than likely. Next days on market, you can see those have been trending down, which a lot of people would think it'd trend up when buyers leave the market, but we also had a lot fewer houses on the market, so the combination of those two things meant that our days on market were actually lower than normal. And then the price volume, I just left in there because it's a graph there. It doesn't give you guys really an indication of what's going on. Numbers, 371, 947, up from 364, 519, so about a 2% change. And as you can see, days on market from April last year, we're down 30%, so a lot fewer days on market for stuff. If we look at the year-to-date number of 384, 660, and 351, 27, we're seeing almost a 10% change there. So I try to use those year-to-date numbers to help temper the variance and stuff like that. So sold listings, you can see the spread here. Again, bulk of stuff, 300 to 400, that's pretty normal for us. But as you can see, this pandemic has definitely hit the luxury market. As you can see, only 1 house sold for over $1 million, whereas last year we had 6 houses sell for over $1 million. Now, the other thing I want to note is the very, very bottom number here. Sold listings were down 33% from April last year. I'm going to switch over to this next slide. Pending listings were down 53%. So if you look at it, I'm going to slip back to the solds. Solds are kind of what happened 30 days ago. The pendings is like what's more recently happening. So that gives you an idea of just how many fewer houses were sold or went under contract in April, less than half. But again, we were seeing inventory levels rise through most of April, and then in the last few weeks, we've been starting to see them decline again. So it'll be interesting to see how May pans out. Let's look at Gilbert. Gilbert's similar, but not quite as in line as we're used to seeing with Gilbert and Chandler. As you can see, the active did bump up. The solds didn't taper off all that much, so we still sold quite a few houses, but a lot less new houses hit the market. We did have that big spike in February, March. Like I've said in some previous videos, the Arizona market was really starting to kind of overheat a bit, and that is like a perfect graph showing the overheating that was happening. The number for last month dropped down from from March. But if you draw a line, it's still in line with kind of like the trend how it's been going. So we're still increasing values, just we had a drop off from that kind of overheated pricing in the market that we had in February and March. It was getting a little bit nutty. Absorption rate, we're still under 1.5 months. We're actually under 1.4 here in Gilbert. Sold to list, I'm going to start sharing this one because I think it gives you an indication of how much sellers are expecting it. So if you're a buyer and you're looking to purchase a place, generally I get a lot of people like, well, can we go in and offer $10,000 less on a $200,000 house? Probably not. We should stay within the realm of what we're kind of observing here. So it gives you kind of idea of what the expectation is in the market, what kind of the general trend is. So if you're expecting to get a way big discount, it may not happen. Now, I say that, and in the same breath, it depends. So we always want to look at the individual property when we calculate and when we decide exactly what we're going to offer on a property, because every area is a little different, each property is different, so we look at all kind of the factors, but this gives you a general idea of what people are getting compared to their list price. Days on market drop off like we saw in Chandler, so fewer days on market. 393, 625, up from 367, 521, 8.74% change. Days on market are down 41% in Gilbert. Year to date, we're at 409, 908, up from 364, 052, a 12.6% change from last year's year to date at this point. So definitely still a hopping, growing, appreciating market in Gilbert. Spread of houses, bulk of them 300 to 400, as is kind of the norm. A few more $1 million plus sold in Gilbert, but if you compare them to the total volume of million plus houses, it's down. They had 5 last year, and there's just 3 this year. So, and then overall sales down 18.4% for Gilbert. Pending listings down 53%. Seeing the same kind of numbers across the board in other cities as well, a decline of roughly 50% on pending listings. I do expect that to bounce back here in the next few weeks. We're already seeing a lot more activity. I've seen more activity. I've got people on the team that are seeing more activity. Our team keeps track of all of our pending deals, and we've seen a pretty good bump up in pending deals over the last few days, so looks like we're heading in that direction. Anyway, like I said before, I'm gonna post a video a little later this week kind of hitting on all of the major questions I keep getting asked over and over and over. So I'm gonna try to answer those. I think I'll probably share them in one big video, but then also kind of drip them as individual answers. But if you've got some questions about the coronavirus, its effect on the market, how our market's performing, what we're expecting to see, what the experts are saying is going to happen, all those kind of things, we're going to answer those. If you've got a question you want answered, make sure to send me a message on Instagram, Facebook, email, call, text, whatever. There's so many ways to get a hold of me. Just drop me a note, comment below in this video, and I'll answer that question later this week. We will see you guys back here next week on the Tuesday Market Update. You guys have a great week. Bye.